I'm Lisa Chan-Carnazzo with the Grubb Company, and today we are talking about mortgage rates, which have been on a steady climb upwards. In fact, rates have almost doubled since the beginning of the year. Joining me is Brady Thomas, a loan advisor with Salle Mortgage. Hi, Brady.
Hi.
All right, so first of all, we started the year with interest rates around 3%. Where are they now, and do you expect them to continue to go upwards?
Yeah, well, that's the million-dollar question. So interest rates have moved from approximately 3% for a 30-year fix to around 5%. Everything right now is affected by inflation. And so rates are moving up as a hedge against inflation. And as long as we see inflation that's kind of unchecked, I expect rates will move up.
So this is the highest rates have been since 2008. How are you seeing this affect people's buying power?
It's interesting. We're really finally in a place where it feels like the word is out that money is more expensive, and buyers perhaps are going to look at changing some of their plans around how competitive they can be or how high they're willing to go for a home.
Are mortgage applications down this year compared to last year, and what about comparing to like 2019?
Yeah. Purchase applications are also down 15 to 20%. As it relates to 2019, so before the pandemic, we're actually pretty similar there in terms of purchase activity so far this year.
So what are some other loan options people can consider if they want to keep their monthly payments down?
Yeah. For the last few years, most folks have opted for a standard 30-year fix. Now, there's kind of two players beyond the 30-year fix that makes sense. So one would be to just do an adjustable rate mortgage. Another option is a kind of a twist on an adjustable rate mortgage, which is called an interest-only loan.
So mortgage rates might seem high now compared to they were just 6 months ago, but what if you compare them to mortgage rate trends over time?
Yeah, that's actually a really good question. So historically, if you look back over the last 50 or 60 years, 30-year fixed rates kind of average between 7 and 9%. So when you compare it to the long picture, rates are still lower than where they have been.
All right, so do you have any advice for home buyers who say they want to just wait until the mortgage rates go down?
Yeah, I mean, that's one approach for sure.
How long are they going to be waiting?
Yeah, there's no guarantee, right? That's the tough part. I mean, as long as inflation is running high, we're probably going to see rates continue to rise. My big piece of advice for people is if you find a home that you love and you can see yourself living in that property for the next 7 to 10 years, there's really never a bad time to purchase. And a lot of people who bought when rates were higher, they then refinanced when they dropped.
All right, Brady Thomas, thanks for talking to me.
Thanks for having me.